4, 3, 2.
And David, I don't think you were playing system sound, so we're going to come in and just talk about it out loud, I guess. But because I am not hearing that. But we got the video played anyway. Welcome out to our halftime report here, guys. Tackle Trading's daily show where we go through the markets one step at a time, detail by detail on what's hitting in the news, the major markets. I've got my brother Mark. I've got myself here, Coach Tim, Coach Mark. We're going to go through the information. Mark, how you doing today?
Oh my God! I mean, seriously. I mean, like see, that's the thing. That was autopilot because you're just like, if I'd been any human being, you've been like, hey, Dave, how you doing today? Hey, Matt, how you doing today? Hey, Cindy, how you doing today? You were on total autopilot, and that's why I hate automation salutations.
Well, you know, but the thing about it is there's so many things in life we do on autopilot, like thank you, please,
but there's
welcome,
no sincerity.
open the door.
But should we make our greetings and become this less sincere society because we're just like these mindless Borg automatonic entities?
We've got Dave Kaiser hosting. Here's something not on autopilot. Dave Kaiser here hosting today. Dave, if you can confirm that we are live on our YouTube channel, I'd appreciate it. Not seeing it up yet in my process. I wonder why it's not notified me yet.
I see we're live. Got 11 folks.
Beautiful. All right. I'm sure it'll pop up at some point.
This is what you call a bad opening.
Bad open. There's no doubt. I mean, this is like the market open where you think it's going to run one way and then it backfills instantly. Yeah, so
I feel like we're an old person like clicking on a video thing. Is this thing working?
Dude, I completely feel like this so often. Let me ask you, you're pretty tech savvy. You know, you're pretty methodical. The older we get, doesn't technology, it's a beautiful thing, but doesn't it drive you crazy too? Trying to learn something new that you don't necessarily need?
Well, no, I just don't learn anything I don't need to know.
That's smart. That's the right approach.
I mean, listen, you know, like why put that stuff in your brain? Like there's only so much we can retain. There's only so much attention we have.
Yeah.
But like, you know, the thing about it is though, the counter argument back in the day when you couldn't program your VCR and you just sat there bewildered, there wasn't YouTube where some nice guy or some nice woman would sit there with a video saying, this is exactly what you need to do and give you a visual step and work through it.
Sure.
And these days, like with YouTube and the information that's out there, I mean, I changed the garbage disposal in my house.
Ooh.
Because of YouTube.
Nice.
I had no inherent ability. My dad didn't teach me how to change a garbage. We didn't have a garbage disposal.
I don't think we did growing up. Yeah, no, I don't think so.
No, so I didn't know how to do it. But you know what? Roy on YouTube knew how to do it, and he walked me through it, told me the tools I need, you know, and that's, you know, like for trading. And so like here was something I didn't even know what to do, and I didn't mean to create this analogy, but it just popped in my head. I didn't know how to do it, but someone helped walk me through it. And hopefully that is what we do at Tackle Trading for our members. And I must apologize to our members, our pro members. We've had a few technical glitches with our internal technological systems, you know, that caused a little bit of hiccup over the last 24 hours, but hopefully those are all worked out. And if you need a hug, just email me at team@tackle.
Digital hug, we'll send one to you for sure.
And if you need a free trial, because we have a lot of good content on portfolio management, on money management happening this week, tomorrow night, Tyler is going to dive into the subject further. Email me and I'll get you set up for a free trial.
You know, if you're out there in your team tackle, did anybody catch the coaches show last night? Because I had a really good time with Tyler. We taught some very important content. If you've not seen that yet, go and check it out on the replay. It should be posted on the website here today. Mark, the markets are up to mix. There's a couple of red stocks on the heat map that I'm looking at right now. Verizon is down. Some technology stocks are up. Facebook notably is back up 1.8%. Apple's up again as well. Let's break down the markets one step at a time if we can. And let's actually start just with the S&P 500. Here we are, green, riding the wave, Mark, and just continuing to hit up near all-time highs. This in the face of several things happening here today. Number one, last night, Bernie, a Democratic socialist, won New Hampshire and is now leading in all kind of projections in the way that they're looking at the Democratic primary. There's all this chatter that, you know, if Bernie becomes the candidate and pushes Trump or even won, it would really be bad for the stock market. Now, what's your reaction to the information from Bernie and him leading now?
Well, you know, I'm not going to get into too big a dive, like trying to predict how computer programs and short-term traders are going to react to an event like Bernie. I mean, just if you want to know the ludicrous nature of trying to make those predictions, just go look at the last election where Trump was appearing to win, and the market was like free falling hundreds and hundreds of points on election night and immediately rebounded. That stuff will shake it out. Make no mistake, the Bernie Sanders as a candidate, right now he's the front runner. Right now he is the, you know, I'm a gambler at the end of the day, probability analysis, you know, and, you know, offshore books have Bernie as the front runner by quite a margin, actually. By quite a margin. You know, the delegate count right now is tight, but the offshore books, like, you know, this is Bernie's to lose right now. You know, and so like the Bernie tanked the stock market headlines from your favorite news sources, get used to them, because if Bernie picks up steam, you are going to see that headline 100 gazillion, and that is a real number, times. Bernie, if he wins, the stock market is going to tank. All Bernie's going to do is print more money.
Yeah. Yeah.
Like,
well, there's several things. Number one, I wonder how many of the people voting for Bernie really care whether the stock market goes up or down. A lot of them probably aren't participating. Not everybody does participate in stock market. Usually, you know, the upper middle class and that type of people.
And here's the thing about a potential Bernie Sanders presidency. Let's give a political science 101. Whenever you hear the stock market's going to tank, the economy is going to go ever, the Congress in the United States has the ability to veto. Bernie can't pass legislation himself.
Right.
Like, you know, and so like this, you know, we're going to become socialist overnight. And I'm a very conservative individual. Anyone who's listened to me on various podcasts or whatever, you know, I vote Republican more than I don't. But like, when you see those headlines in the coming month, Bernie ripped the stock market, yeah, I take him with a grain of salt.
I would take him with a grain of salt as well. And the market doesn't actually care right now that he did win that New Hampshire primary, because it's still going up. Didn't really process the news in that negative way that some people think it might be happening, but we'll keep talking about that. We're going to talk politics this year. We have to. It is a presidential election cycle, and it does impact market on policy in some ways. S&P 500 is still hitting new highs and up near the top. Mark, quick look at the NASDAQ as well, though, because in fact, the NASDAQ is even stronger. As I'm looking at the broad indexes, obviously this is ranked number one. Tech is big right now, and tech is just leading the way. Apple Computer, Amazon, Google, Microsoft, they're all just flush with cash, and they're all up above that $1 trillion mark. Is technology still your number one sector, Mark?
Well, I don't know how you for the longest time. I mean, just look back at the trend from a technical perspective. You don't see trends like this, the smoothness of this very often. The trend has been relentless. The trend has been smooth. We've spent almost the entire, 1, 2, 3, going on 4 months above the 9 EMA with the exception of a couple days. That's pretty insane.
Yeah.
To basically spend 4 months above the 9 EMA, that's pretty insane. And it shows you the power of computer algorithms, but that's a conversation for another day. But yeah, tech's strong. Tech is extremely strong, has been for a while now.
Absolutely. Bull. And it keeps hitting new highs. And by the way, it kind of imposes against one sector I think is very bullish long-term, but not doing very good today, is XLV. Look at the healthcare sector. I saw some misses in this sector from that perspective. That's only down just a hair, but in terms of health insurance companies, I saw several of them down quite a bit. Now it's up near the top.
Just look for the same time frame that we just looked at technology, the exact same time frame. I mean, what's healthcare been do? Is it up in that same time frame? Sure. is it anywhere near that the congruency of the smoothness of the trend? No, not even close.
Yeah, I think there's some relative interesting weakness there. But I mean, here's the thing: if it does break above 105, you're going to call that a new entry point. So even in a sector that is showing me the only mixed information today on the heat map, you're still seeing the potential for another breakout. The Russell kind of fading in the middle. Not much else on the indexes, quite frankly. Mark, let's move on to crude oil if we can. You know, one of the impacts of the coronavirus quite directly is going to be on the crude oil product. In fact, the biggest commodity in the world is affected by global demand as much as anything. I read a report out of OPEC that this coronavirus scare is going to impact oil demand by 300,000 barrels per day, Mark.
Yeah.
Demand drops, that should affect the price. Now, it might be priced in. You could make the argument that's why it was going down all month, right?
First of all, if you think any of this is priced in, no. I mean, we don't know. Like, it might be priced in, it might be too priced in. I mean, the coronavirus is a unique news story that, God willing, we don't see very often in the course of our lifetimes. What's that old proverb? You know, pray that you live in uninteresting times. You know, so I hope that this expanding virus news story is something that, quite frankly, we never talk about again. But it is a unique story, and so, like, markets react, they adjust, but you have a little support level here that's been formed. Since the coronavirus really broke, you've been below the 9 EMA, that short-term momentum indicator, the entire time. You might have a close above that today. Now, that doesn't mean the reverse is all the worst is over, but you do see the formation of a reversal pattern starting to form. And so that is encouraging for individuals. I know I got my eye out now. I got my eye out now for potential entry points. But you know, once again, I'm not there yet. I promise you, I will be on the lounge. When I get into my oil positions, I will be everywhere. So you know, this is why I'm doing it. This and why.
I think it's way too early to call a reversal technically as well as fundamentally on this news. Guys, we've been talking about this data out of China, and the headlines the last 2 days, Mark, has been that the outbreak is slowing down. And then I read a report today, quite frankly, very, very directly, right in line with what we've been saying for days. China's not counting all of the people they were counting 2 weeks ago. They changed the way they're counting people who have coronavirus, because if you're not showing symptoms yet, even
I know,
if you
and
tested
now
positive,
you know, I've been saying this whole time, like, when we know the worst is over, we're going to have to guess, because we have to assume now that we don't get accurate data. So I think we're going to have to go with cases in the United States and other reputable places to, you know, as long as it's not spreading there. I think everybody's just watched saying, China, you got a bad situation over there, and we can't trust you with the data.
Yeah, I can't trust the data coming out of there. I don't believe that it is slowing down yet. First of all, it takes 28 days for some cases to actually show symptoms. So if you've tested positive for coronavirus, you have coronavirus. By the way, they've changed it to COVID-19. That is the official name. You know, there's many forms of the coronavirus, so we probably should start calling it COVID-19, and that is the actual COVID-19 is the strain that they're calling it right now.
Right.
I'm not assuming that we're out of this mess yet. I'm just not going to do it until I get more clarity actually from sources that I can trust. I don't trust Chinese data coming out of China. Come on.
I mean, are we trading? I mean, this whole time, you know, we've been, you know, people have been doing little things, but this cautious, you know, like, it's about position sizing. It's about the amount of money you have in the market. You know, you're always going to dilly-dally. Now, that might be dilly-dallying and day trading. That might be managing your long-term existing investments. There's always things to do. What we're really talking about is going gung-ho, full board on swing trading, on those directional short-term trade setups. You know, and it's like, I will always, from now to the end of my days, err on the side of caution, because the market's always going to be there. It's going to be there in March. It's going to be in April. It's going to be there in 2023. It's going to be there in 2000. I don't know if I'll be there, you know, given this mortal frame, but the market will be there. So caution when these unique situations pop up. Like, I'm just going to exercise caution, because, like, once it calms down, the market's going to be there and I can go about business.
Yeah. Yeah. While you're here, I always want to talk a little bit more commodities. Give me natural gas real quick if you can. Nat gas having a couple of green candles for the first time in months, actually, here. It feels like, I know you've had some string together at different points, but now we're back into the 9 EMA. You're seeing some little price action off the bottom. Mark, as long as we're still below the 9, you kind of just stay bearish
Well,
and
the
cautious.
20-day moving average is the one I've stated that I'm looking for, and I have a specific signal I'm looking for. The one, once again, like when you've had breakdowns, this is something I always look for. So you break through support, and then you have a huge sell-off. The last couple breakdowns through support have not been huge sell-offs. It's been down day, form support, down day, form support. You know, I wouldn't be surprised if this thing is getting ready to reverse. Now, I'm going to be patient, you know, because like it hasn't been above the 20-day moving average with a confirmation signal since November.
Sure. Yeah.
Since November. It's you know, it's been that orange line there is the 20-day moving average on natural gas. So
yeah, and obviously, as long as it's staying below those, you're going to be waiting for some confirmation. And so weather dependent. I like trading natural gas. I've not been in for a couple of weeks, Mark, since it broke below those support levels and started showing me that weakness. It's just too volatile right now to do bull puts. Even if I was all the way down at like 150, I just don't feel comfortable with it until I get better technical signals. Zone defense is great. Personally, I'm going to wait. That's just where I'm at. Silver sitting on support, platinum sitting on support, copper, a little reversal signal. Quick look at actually probably palladium is the only one I really want to talk about here. Gold is neutral. There's nothing really new in that chart. But man, you've got this little W breakout developing here, Mark, and a break above resistance wherever you want to identify it, 2,400,
and
something
let's just
like
do
that.
a quick, and I'm probably going to slaughter this, but what Tim is talking about, and I'm drawing the lines here. Let me remove these lines. Oh, let me make sure. Anyways, he is talking about, you know, the formation of support and resistance and little rallies that form the letter W. So what you see on this, and because it's very common for stocks, commodities to trade in a short-term consolidation pattern where they just trade sideways. So that's very common. And this is a pattern that a lot of traders look for, where, you know, in the back and forth, down, up, with a resistance level forming the letter W. A breakout of that resistance level is something a lot of traders look for, especially when it follows this really nice upward trend that's been going for a long time.
Yeah. It's a beautiful W pattern that is developing. And if we can break out of the high point up here, I mean, that would be a new entry point. I know we've had some volatility in the red candles, which is where my only caution has come in. Volume and big red candles have come down, but quite frankly, this product has been resilient, Mark, and there's demand behind it on the fundamental side, and the technical side is looking good as well. Keep an eye on palladium. Move on to the dollar here real quick. You know, Jerome Powell's on the hill again here today, Mark, and he's basically reiterated that their policy.
What's the ticker symbol for the dollar? I literally spend so little time looking at Forex.
It's not your, you can do UUP, which is the ETF.
I know that one.
Or
that's the one
$ DXY,
yeah,
the index.
All right, now dollar segment is over. What's next?
Well, let me ask you about interest rates, because obviously rates have come down this month as a fear in this global coronavirus, I guess COVID-19 that we're now going to accurately call it, has pushed money into the interest rate markets, has pushed money into the dollar. Do you still see this as a bullish chart, just from a chart perspective? Give me the DXY, by the way. It's a better chart. The UUP ETF doesn't trade clean for whatever reason. $DXY.
There's your candle. It's a good chart. Let's move on.
So
let's just talk the Fed. The dollar chart is terribly ugly.
It is ugly.
Regardless.
So let's talk Fed.
And almost none of our members trade it. But one thing that impacts all of us is Fed policy. Yeah. And Jerome Powell was there on the Hill and basically saying, hey, you know, status quo, that's what we're going to do moving forward. And that's, you know, music to the market's ears, because this is a Fed. Now, some people use the term Fed-driven bubble, but at a minimum, it is a Fed-driven market. And as long as the Federal Reserve keeps his monetary policy the way it is, the market has this, like, I mean, this is how bubbles form, to be quite frank. And I'm
Yeah.
not a doomsayer. I'm a trade the chart, you know, whatever. But this is how bubbles form, where people feel like nothing can go wrong. And traders and the market participants feel that as long as the Fed has the markets back, nothing can go wrong.
Yeah.
Nothing.
No.
And Jerome Powell got up there on the Hill and he was like, status quo, moving ahead in the near future. So
I find it kind of funny whenever these Fed chairs go out to Capitol Hill and they start talking to these congressmen and senators and whoever it is that's interviewing them based on the testimony at the time. They're not really getting down to any real business, Mark. I mean, obviously these are prepared speeches at the beginning, and then the questions usually have been vetted. Most senators don't want to push these guys because they don't know what they're talking about.
Orrin
They don't want
Hatch didn't know how Facebook worked. You
So-
think you're listen, have you met your average congressman and senator? These people are not the best and the brightest. Have you heard their line of questioning? They could not ask intelligent questions of Jerome Powell. Most of them, I'm sure there are a few exceptions. There always are.
Yep.
They couldn't ask intelligent questions of Jerome Powell in any shape or form.
No, I don't think there's much you can
So,
learn from it.
so some really bright staffer gives them some questions like, Senator, what's your face? This is a good question to ask. And the senator's like, well, what does it mean? And the staffer says, just eat your soup and ask the question when Jerome Powell comes out.
Oh, Matt was telling me last night about some senator or congressman that was asking Powell, and she was saying something like, and your predecessor, Ben Bernanke, she's like, had to read the name like 3 or 4 times because did not know how to say the word Bernanke, Mark.
I wouldn't trust these people to feed my cats on a regular basis.
Cats are pretty resilient.
And I'm talking them all, Democrats, Republican, they all just are terrible as a general rule. Few exceptions, a few I admire very much, but
Sure.
oh my goodness gracious.
By the way, Bitcoin also hit a new high here today for the year. We don't have to move on to Lyft. Lyft has earnings miss here last night. We've been talking about this company.
Tim, when you said in pre-production, Mark, can you do the screen share? I'm like, I ain't sharing anything I don't want to.
So that's the thing. When you drive the car on road trips, you get to play the music, right?
You do. Absolutely.
There are certain perks to being behind the wheel. There's no question about it.
We're not looking at Bitcoin today.
All right, fair enough. Lyft down 5%. Uber blasted out on its earnings. Lyft actually missed on the earnings. I didn't see much difference in the way they were analyzing the data. I mean, Lyft, they just didn't kind of paint this path to profitability.
How about these companies that don't make money? You just read the chart. One thing that I spent a lot of my time on that I wish, and I'm glad I stopped, is I tried to micro-analyze every aspect of a specific company. Now, first of all, there's thousands and thousands of publicly traded companies. You don't have time for it. Like if you spend an hour on a company a day that's publicly traded, that's all you could spend all year, and you wouldn't do anything else with your entire year but that. We have to look for common themes. We have to look for ways to make money in certain situations. Like there's big storylines. Like for Netflix, we know that US subscription numbers and subscription numbers globally is the big storyline. That is really the major thing that the market cares about and drives it. There's nothing wrong with knowledge, but we only have so much time. And so this is just the public service message from the halftime YouTube report. Unless, diving in deep into companies' earnings, go on a walk with your family.
There you go. I mean, here's the thing. The market likes, because I get it. And how many times have you had this question from a student? I read the report, they beat earnings, but the stock is down. Or I read the report
all the time. I mean, you cannot look at the headline numbers and try to make zig or zag of it. It's just a waste of time. Just save your time. There is always, well, not always, but usually something else that's the main storyline. Netflix can do whatever it wants with its, hey, it beat EPS, it fell short. It beat revenue, it fell short. It doesn't matter unless those subscription numbers are a certain way. So, trying to it's just problematic. It's just problematic. But what's not problematic is when Uber has a nice breakout, providing a nice trading opportunity like it did a week ago. I believe we had this on our scouting report.
Yeah, and Uber's looking great here. Green candle after green candle is clearly in a nice short-term swing move. Lift on the red candle. I don't know, Mark. I kind of discount the red candle in one regard, just from a chart perspective. Still above the M8s. You know, I know that tail's not great. The red candle's not great. That's an inverted hammer. It's not what you want to see if you're a bull. No question about it. But on the weekly chart, Mark, you're above the MAs. On a daily chart, probably not obviously going to be above those on the intraday and whatnot. I still like the company. I'll wait for it to show me some strength and whatnot before I get into it, but I still do like the company. One of your old favorites, Mark, Micron, real quick, moving on to this one. They had an upgrade, you know, chip makers continuing to show me strength. I mean, that's almost, it's not a confirmed breakout because it hasn't closed there and it's not even there right now, but you got to like that chart right there.
Yeah, I mean, Micron, I mean, if you look back for a long time now, Micron's chart is very choppy. Lots of little gaps up, down, not a, it is, I mean, when you go to like those smooth charts, like when we were looking at the NASDAQ, that nice smooth, once again, you've seen tremendous price appreciation, but it's been in this really choppy, like boom, take a leg up, then sell off, take a leg up, sell off. And when it's taken those legs up, it's been breaking out of resistance. And these are going to be some really bad resistance lines, you know, but like, when it broke out of resistance the last time, and that's a really bad line, I apologize for that, you know, trade sideways, volatile, boom, go from 50 to 58 in a matter of a couple weeks. And so here you are pushing up against a resistance zone after trading sideways for a few months. Micron can run. It's shown that for the last year.
Yeah. I like the company. They're a different kind of company.
The company. I think they're really well run.
Well, and it's different than AMD, Mark. And I know that you've actually, you know a lot more about this than most traders even. Not all semiconductors are the same. You know, not always semiconductor producers are the same. They do different types of business. They build different types of products. Micron, actually, if I was looking at the fundamentals, it's a good company. It's on our dirty, sexy money list for a reason. And I know it's
a high Micron CEO. He's one of my favorite CEOs out there. I just like the way he runs that business.
Even as a chip maker, only an 18 PE ratio and a 10 forward PE ratio over the next 12 months, Mark. I think you got to have it on watch list. You know, it's on our DSM list for a reason.
You know what Micron's CEO would say when you would say, hey, how are you doing today? He would say, you know, the amount of time we could produce things if we stopped saying that and just got to work.
The amount of productivity you're wasting by having pleasantries. What are you guys, Borg? You're like cyborgs here. Listen, the human condition, we need pleasantries.
But it's not even sincere. It's not even sincere.
Shopify, I'll tell you what is sincere in 2020. The consumer online at home is real. Shopify has been one of the best performing companies.
Shopify has been a rock star for the longest time.
Mark, they reissued full year guidance. It gapped out. The candle's not great for a day trader if you're up there buying or anything like that, but they crushed their earnings numbers and it's up like what, 12% here on the day. Sometimes a candle like that can be deceiving to longer term charts. Short-term charts though, that actually an intraday, you'll see that thing breaking back down. If that thing backfilled to like $500, Mark, it would be a great entry point, fill the gap maybe within 2 weeks or a month or something like that. I love this chart, love the company. I love what I'm seeing. Not an entry today, Mark, but still a juggernaut. Yeah.
I mean, are you going to fight that trend? You're going to fight that price movement?
Yeah.
You know?
Well, and they even they were saying that even for the next 12 months, they expect revenues to be up. They expect everything to be going well. They're very positive about their business model, and they should be. There's a reason why that stock has been one of the top performers. Tell you, one of the worst performers in the market has been the marijuana sector. Aurora Cannabis is one of the most popular ones.
What's that ticker symbol?
ACB.
See, I don't like memorize all of your liberal hippie. Like seriously, like, you know, listen, I need to write a paper on the craziness of the marijuana, because I mean, when you think about market rationality, markets are not rational in the short term. They're not rational for any given day, any given week, any given month, even any given 3 or 4 or 6 month block. They're not rational. Eventually, over the long term, they are. You know, and I think that's what you are starting to see in the marijuana company. These companies could not even sniff profitability, didn't have this robust business model, but hey, they were marijuana stocks, and that was cool. Wouldn't it be cool? That seems like hip. Hey, you know, like, and it got caught up in that whole thing. I mean, this is why, like, when companies don't make money, I'm just going to shy away, because yes, do I miss out on that next big thing? Sure. But I'm in a different stage of my investing. I'm not 22. You know, I don't need to catch the next big thing. By the time the next big thing becomes the next big thing, I'm dead. So, you know, like, give me profitability. And a marijuana stock is it's a tell that will be repeated with something else.
100%. It will happen again. It's happened before. It's been happening for, quite frankly, hundreds of years, if not thousands of years, with products, Mark, and the euphoria behind new ideas.
The euphoria behind new ideas
is what happens. Here's just listen to these numbers and tell me if this just strikes your fancy at all. It's a $1.72 billion market cap, and they lost $1 billion last quarter.
That's, hey, you know, sign me up.
What in the world is going on here?
Sign me up.
Who's financing this right now?
Once again, there's a lot of money out there. I mean, the economy, think about it, we are at a record level of expansion in the business cycle. We talked about the business cycle 2 podcast to go on tradingjustice.com. You know, I mean, people, once again, hey, you know, they want to be in the next big thing, and they want to go to cocktail parties and be like, I'm financing a marijuana company. How cool am I?
Right.
Like,
one of the hedge funds, like, oh yeah, we got shares in you know, that space and whatnot. I get it. But it's just crazy. I mean, you look at Tilray, you know, we talk ACB, it makes me think of all the marijuana stocks. Tilray was the one that blasted out, and you can't even see it on the chart though. We don't have enough history now. It's been that long. When this one took off, Mark, in about a month and a half stretch, it went from 50 to $300, you know.
Yep.
We're a $16 stock now. Right? You know.
And you know what you see down here? Negative earnings, negative earnings, negative earnings, negative earnings, negative earnings, negative earnings. They're not, you know, hey, not every company that doesn't make money eventually makes money.
That's true.
Sometimes they just keep on losing money.
Not every company becomes Amazon, where you can say, oh yeah, they were a negative PE company for a long time. Yeah, but they obviously have
that thing has been below the 20 weekly. I mean, you look at the 20 weekly, which is one of, I would argue, the most underrated indicator in the entire world of investing and trading is the 20 weekly. Look at every time in the last year and a half that Tilray's come up to that 20 weekly, what's happened? Slapped it down. It's just computers, traders come in and say, this is where I take my short-term profits. This is where I short. This is where, and just slap it down, slap it down, slap it down. You know, hey, if you're not using the 20 weekly, I think you're missing out on something.
Weekly charts in general, I think, are very important as well. It's a really, really good call. Multiple time frame analysis. You'll see coaches do that, where they go from daily to weekly, back down to daily, then into the intraday. It's because we're trying to map it all out in our head, and getting those different time frames, Mark, is very important for you, right?
Yeah, no, just like, I mean, if I'm going to put a trade, I mean, think about this. If I'm going to put a trade, I want to know where potential sellers or buyers are coming in, right? Because that's going to impact how I manage or whether I get into the trade or not. And if, like, you're getting in and you're like, well, I'm going to get in because it's breaking short-term resistance, and you're getting in and there's that 20 weekly right overhead, why are you doing that?
Sure.
That's just dumb, in my opinion. But most people don't even see it because they don't back out to the weekly chart, or they don't have moving averages on their weekly chart. So they don't even see these areas where computers come in and are waiting to mess up their trade. They don't even see it.
Sure. That's exactly right.
They don't take that 2 seconds.
Yeah. Let's take a quick peek at a few companies that are on our Tackle 25 list. Grab my attention here this morning. Activision Blizzard. Not a great swing trading stock, but a real good covered call stock, which is why it is on that Tackle 25 mark, just continuing to press near all-time highs here. And, well, I don't know if it is all-time high now that I say that. I know it's a multi-year high. I'd have to confirm.
Oh, it's not even close to all-time highs. Just a couple of years ago, it was.
Yeah.
But, you know, slow and steady.
coming back up, looking good post earnings and actually still showing a lot of strength there. Their holiday sales numbers were great, and it looks like the market still likes that company. AMAT actually as well. Applied Materials, one of those chip makers, and back down on that daily chart. I read that their earnings numbers and we're pretty okay. And the market is actually kind of liking that, up 1.4%. Looks like it wants to break out there near the high. Dividend company, Mark, one that
Dude, to be fair, it is hard to trust anything right now.
Yeah.
In the tech space, because tech is so hot, it's just lifting it. This is why you do top-down analysis. Like when you have a relentless sector that is going as bullish as tech is going to lift everything up with it for the most part.
Yeah, but not lift, pun intended. Lift is down.
Lift is not technology.
Well, they'll claim they are. It's an app and all that kind of stuff.
Oh my goodness, everything is technology. McDonald's is technology, you know that, because they have special ways to make chicken nuggets, and that does involve technology. So McDonald's is a technology company by that logic.
Hey, listen, by the time they build all the automation out and that you don't actually have a server or waiter there, they might just be a tech firm at some point in the future. We'll see. Give me a dividend look at this Southern company, SO. We don't usually look at our dividend paying companies, Mark, but Southern, very conservative, pays a nice dividend, nice, beautiful pullback. And you've got a moving average pinch up there. When I saw this chart, I thought of you and I'm thinking, okay, Mark loves dividends. You usually like dividends when you're getting at the low.
Trade.
Yeah.
Utilities.
Yeah.
I only invest in them.
Invest in them. Yeah. That pinch up there though, is that something that if it popped back above that 9, is that a good signal for you?
Well, it's below the 20. Your long-term trends upward. You do have some room to move. So, I mean, I would like it to stay down here. In this particular situation, what I like it to do is hang out here for a week or two and then give you that signal.
I see.
Like,
give it some time, let that thing cook a little bit and then come back through.
Basically, yes.
Yeah. And then one more on our Tackle 25 DSM list, Pinterest. And I've not pulled the trigger on this one, still waiting on it. Pins, give it an S on the end there. I like this backfill developing here. Gap out on strong earnings.
Do you have a Pinterest account?
Candle. I think I do. Yeah. I think I do. I created one, but I don't.
Obviously not one you use.
No, I don't. I never have. But do you have one?
I mean, come on.
I guarantee that the last person you took on a date has one. I bet your ex-wife has one. My wife has one. Females are actually the #1 demographic on Pinterest.
But does my first wife have one?
I'm not sure about that.
Yeah, I mean, right. I mean, listen, so yeah.
I like this company. I'm interested.
I have never even used this company. And so like whenever I hear pins, I'm like, I've went into Instagram and like Instagram's an amazing product. I see why people love it. I just have never used the site.
Different demographics. You got to think from a sales perspective. One thing I studied, obviously these social media outlets, is who actually goes on there to use them for different purposes. Pinterest are more likely to have people go on there and buy stuff, Mark. So their ad revenue and their demographic of their active daily users, it's not quite as high as Facebook, obviously not quite as high as Instagram, but the people who go to Pinterest are going to shop, and that can turn into some profitability. It's my expectation. It's why it's on our DSM list. I like the fundamentals. I like the idea, and I like its potential here in 2020. And that gap fill, I mean, I like technical conditions like this. Gap out, red candle, red candle, red candle.
Sure.
Into the old resistance. If it pops back above that little candlestick, I'm going to be interested. So I'm going to keep an eye on that one right there. And other than that, Mark, there's a couple stocks on the options report and the stock report. But quite frankly, if you're a pro member, go check those out. There's a lot of great watch list over there on Tackle Trading's website. I'm getting ready to go to the great city of Los Angeles, getting on a flight here in about 3 hours, and I got to get packed and ready for that.
Hey, and one thing I need to know, Tim won the game on the Trading Justice podcast. But there's a dispute. If anyone knows how many people in Green River, Utah, live in the Emery County side of Green River versus the Grand County side, please email me at Team at Tackle Trading.
I can call the county, like, what is it, an auditor, treasurer? Who would actually know that information? The assessor, who does the county census and kind of keeps track of, voting records and data?
Like who would know? Because Green River is like half of it's on one county, half of it's on another, and Tim's victory is on the line, and we're trying to research.
Last bits of wisdom, Mark. Give our audience some direction, some things to think about, what we got going on in tackle trading this week. Kind of let's wrap this thing up.
Like if you have a great, let me rephrase that. Nobody has a perfect understanding of portfolio design until you've been in trading and investing a while. You start to pick up on the concepts, you start to pick up on the terminology, conceptually you start to visualize it, but it is so foundational, and we've been spending a lot of time this week. We'll probably spend a lot of time next week as well on money management, portfolio design, getting this foundational knowledge, going in depth on a lot of different shows. It is a great time to become a pro member if you do not have a perfect understanding, and you shouldn't. It's not like we're born with this knowledge.
Here's
but it's
a quote.
critical.
Yeah,
it's critical.
Here's a quote coming in over the wire directly from Washington, and Jerome Powell was asked if he would use QE in the future if we went into a recession. Quote, "We will use those tools. I believe we will use them aggressively should the need arise to do so."
Yeah, no, he's doing it right now, and he doesn't need to do it. So why wouldn't? I mean, no, the Fed. Hey, listen, maybe 30 years from now, we all look back and be like, hey, I don't know. But the only thing I do know for certainty is the market loves Fed-driven economy.
Sure.
They love it.
Yeah.
And they will continue to love it.
Sure. I mean, they're on like an opium drip here, Mark. There's no question about it for the last 11 years. Of course they love it. Free money, flood the market. Let's do it. Expand the balance sheet. But you got to trade what's happening out there. And when those things happen, usually, commodities
and once
appreciate,
again, my last,
stocks
okay, so
appreciate.
here is the last bit of wisdom. If something really terrible happens because of the Fed 27 years from now, does that impact any of your trading this week?
Probably not. Probably not. If you're a pro member, go watch the replay from the coaches show last night. If you saw it, great to have you. If you're watching the show right now, got a great audience like we do each and every day. We'll be back tomorrow. But before you leave, give me a thumbs up. We're only at about 35% thumbs ups. And usually I like to at least get that 50% mark. If you enjoyed this here today, always, subscribe to our channel, click the bell, come and join us in our pro member content. Now's a great time, Mark, to join us. We got Cash Flow Club tomorrow. We got reports over the weekend. We got all the stuff we're doing. And if you've never been a pro at tackle trading, there's no real reason not to try it and see what it's all about on that 15-day trial. So get in the game, guys. Great job today, Mark. I'm going to go get ready for a flight. Wish me luck. We'll see everybody tomorrow in our halftime report. Peace out.